On the Money Watch, there could be some daylight when it comes to the worldwide trade war. China has expressed openness to trade talks with the U.S., but under certain conditions. All of this has had a huge impact on the economy. And to help us sort it all out, we have with us financial expert Chuck Zodda of the Armstrong Advisory Group. So, Chuck, thanks for being with us.
Absolutely. Great to chat today.
So busy. First off, what do you make of the potential trade talks with China and what impact it could have on Wall Street?
Well, I think it's something where you have to take all of this with a grain of salt just because you don't know exactly what's going on behind the scenes here. But obviously, it is something where if you can get, even just the two parties in the same room together and start talking about things, you potentially put yourself on a path to some kind of resolution. I think the big question here is going to be, hey, how long does it take and what does that resolution look like? Simply because there are some pretty big sticking points that are out there. And I think that both sides are going to be fairly dug in terms of some of the key things that they want to either keep or change in any negotiations. So I think it would certainly, if you could get some kind of progress towards a thawing, it obviously would be a positive for markets. But I think we have to also be realistic that the potential for a deal that's worked out between the U.S. and China is not something that's likely to come together over a period of days and weeks, but rather months or even years because of the magnitude of issues being discussed there.
Sure. The value of the U.S. dollar has dropped dramatically. What effect is that having?
So this is an interesting one because one of the things that we saw in the first Trump term in 2017 was that the U.S. dollar fell by about 10% over the course of his first year in office. And it did not cause any significant disruptions in any way, shape, or form. You can make an argument that the 2017-2018 economy was one of the best we've seen in the last 50, 60 years. In this case, we've seen about a 5% drop in the value of the dollar relative to other currencies, but this has happened in a span of a few weeks. And so the magnitude and speed at which this is happening is something that has some questions being raised in terms of, hey, are foreign investors starting to look at U.S. assets differently than they have in the past? And is that something that could play into, how capital flows around the globe in the future? So I don't know that you can take too much from, what's happened in the last couple of weeks in markets, just because in crisis situations, things move dramatically, and then you may see them kind of retrace some of those moves later on. But I think it is something that's worth watching over the next 2 to 3 months to see if there's any follow through or if it snaps back closer to where it was previously.
There has been a rise in the value of gold over the past year. Is that kind of a natural effect when stocks and bonds seem like a more risky option?
It can be, and this also kind of gets at what we were talking about just earlier with the U.S. dollar, and that, hey, if foreign investors are looking for a place, that's kind of a safe haven. Traditionally, it's been the U.S. dollar and U.S. bonds. When things get bad in the global economy, you see money flocking into U.S. bonds and the U.S. dollar strengthening. That's what we normally see in crisis situations. So I think this is one of those cases where you sit there and you say, hey, if I am a foreign investor, whether it's someone on the institutional side, a foreign government, whoever it may be, if I am someone who traditionally has sought out the dollar as a safe haven, where do I maybe start to look for an alternative? Not for everything, but maybe just on the margins. And so that could be some of what we're seeing there. In addition to concerns about potential inflation, those I think could be some of the main driving forces behind what we've seen in the price changes in gold so far this year.
Despite all of the economic turmoil, a report today says that U.S. shoppers actually increased their spending, Chuck.
Yeah, this is we got this at about 8:30 this morning. It was the retail sales report for the month of March. I do discount this a little bit just for a couple of reasons. The first is it was all before the April 2nd tariff announcement, so we don't know how behaviors have changed in the last 2 weeks. The other piece is there is certainly something that we're seeing here, in particular in the auto sector, with consumers largely saying, hey, we need to speed up our purchases of, those big ticket items that might see the prices go up in response to tariffs. And so we saw a huge jump in auto sales for the month of March that may even continue into April, simply because the vehicles that are on dealer lots now largely came in before tariffs were implemented. So I think that the data the next few months is going to be messy and challenging to sort through, because you are going to get people that are trying to front run additional tariffs and things like that. And so it's going to be hard to tell exactly what's going on. But certainly, as you noted, look, it was a good retail sales report for the month of March. I think it's just a question of, hey, the world has changed since that April 2nd tariff announcement. Let's see what the new data looks like over the coming months to see how decisions may be evolving.
Sure, that will be the one that's actually telling. All right, Chuck Zodda from the Armstrong Advisory Group, thank you so much for talking with us.
All right, have a great day.